Make it stupidly simple. And that is how you can make money consistently in the market. Hey, what's up guys? Happy New Year. This is 2024 and this is our first video of the year. So I'm going to do something with Forex trading because I know it's a new year and most people probably are thinking about income source. I always say Forex trading is more of an income skill set. So you build your skills so you can earn more income. I don't take Forex trading, especially day trading, as an investment. It's an investment in your skill set, yes. It's an investment in like a business, but not an investment for long-term gains. It's an investment to generate income. So sometimes people get confused of what Forex is. They say, oh, I want to invest in Forex. No, you're investing in the skill so you can be able to trade Forex, make income, and then invest in other assets for long-term gain. That's how you should look at it. Look at it like the daily business that you have to do to give you that daily income. If you don't put in the effort, the time, the determination, if you don't take your time to learn the process, you're going to lose money. And let me just give this caveat. A lot of people are losing money on Forex trading because of these fake scams of getting rich easy or quick through Forex trading, which is just not practical. And these people keep telling you, oh, they want to trade for you, they want to. The process and the mental requirement of Forex trading and the kind of skill required will not allow someone to take your money and trade for you unless he has a very big position and you combine your resources and you're trading together, or unless somebody is using these bots, which again the bots lose, because I always say one thing: if I have a successful bot that's trading for me successfully over time and I can see the profits, why on earth do I want to sell that bot to someone else? Why not on earth do I want to give you a bot that is giving me money consistently? The only thing someone can give you practically and genuinely is a strategy that can help you make money. But even those strategies are not 100%. I teach strategy all the time, and even right now I have clients coming for strategy coaching. But it's not because we're trying to make quick money. It's because we're trying to learn a skill. One, it needs time, it needs patience, and needs very acute emotional discipline. So if you don't have those things, despite what you know, despite the strategy you're using, despite the board, if you don't have some of these qualities, you cannot just trade Forex. Sometimes I just tell my clients, no, this is not for you. Look for something else whereby you can put time and get results out of it. But with Forex trading, you have to be patient, you have to be determined, and you have to be really committed to that process. It's not something you want to come in today and make quick money tomorrow. So anyway, guys, it's 2024. Let's be more careful with our money. You've gone out there, you've worked hard, you've made the money. So don't go ahead and lose that money with some people telling you, oh, I can trade Forex and make you like loads of money. Find an investment, put in that money for long-term gains, you will make money, right? Anyways, like I said, so today I'm going to look at Forex trading basics, right? Something to help you kickstart your 2024 with your nice trading skills so you can get to that next level in your trading game. And today we're looking at some of the most basic stuff. You know me, I don't get complicate Forex trading. Don't complicate the process of trading Forex. Make it stupidly simple. And that is how you can make money consistently in the market. And don't be someone who jumps from one strategy to another because today you lost money and then you jump on a new one. You will never make money. Take one strategy. If you want my coaching, come to me. I drill you on one strategy, you focus on it. I guarantee you, if you focus on that strategy with good money management for just 12 months, you will be in a completely different space when it comes to Forex trading. So my website below, reach out to me at any time. Anyway, today let's look at support and resistance and candlesticks. Those are two things, or I would say three, but really two, that can change your trading in 2024. So how do you use them to transform your trading in 2024? It's going to be simple, straightforward. We just look at price action, we look at those price reaction areas, and then we look at candlestick information. As simple as that, nothing complex. Let's go. Use this to kind of show you things before we get into our trading platform. But today we want to look at just support and resistance, and then some candlesticks. These are some of the basic things you want to know if you want to trade Forex. And it's gonna be so simple, sometimes it just blows your mind. Make it simple like this. Start trading simply and tell me if you want to improve your trading exponentially. So support and resistance, what are they anyway? It's just basically certain reaction points in the market When the market is moving in cycles, like we know that market move in cycles, it has certain areas in which price reacts. It has certain areas whereby the market finds support or resistance, and these places are basically are arrived at because of bias sentiments or bias emotions or logic or whatever it is you might want to call it. But at the end of the day, what happens is that when buyers enter into the market, let's say, for example, they drive the prices up as usual, because when demand goes up, prices goes up. It reaches a point whereby they cannot drive that price up anymore. Sellers come into the market, then start driving the price down. Remember, trading is all about the difference between the buying and the selling price. It's always a fight between the bulls and the bears, bulls being buyers, bears being sellers. So what happens is that the price is always moving in cycles. So cycles, I mean like this. I'm terrible at doing, but yeah, that's, you get the gist. There's no time the market moves like this or like this. The market is always moving in cycles. So I hope you understand. Let me just move that. The market always moves in cycles. It's always moving like this, or it could be moving like this if it's a downtrend, right? So we always have like downtrend and we have uptrend. Simple, right? These are the simple basics of forex trading. Now, sometimes we have what we call sideways market or consolidation, whereby the market is moving sideways, it's just hitting two different points, right? Simple, simple, simple logic. Don't complicate this thing. Don't complicate it. So let's move that. So what happens is that when the market is moving in cycles, despite the direction, it has a level in which it hits certain points in the market. Now, when it is trending upwards and it's making new highs and new high highs and new high lows, these are high, new highs, and new high lows, right? It makes a channel going up. It's just logic, right? So it makes a channel going up. So new higher highs and higher lows, right? So each time it comes back, it bounces, it makes a new high. It makes a channel. It makes a very clear channel. Now, generally speaking, you will find that despite how the market moves, it moves, make a high, make that, make that, make that, sometimes move like that, it always have some significant points in the market like these ones, whereby the price hits and bounces back. The price hits and bounces back, right? The price hits and bounces back. These are the places we call support and resistance. Now it can be a support and resistance on an uptrend as well. Then it forms a channel, or a downtrend, it forms a channel going down. It doesn't matter if it's a consolidation, it's just a very straight support or resistance. But the upper one is what we call a resistance, and the down one is what we call a support. This is a resistance, right? So we have the resistance. So prices are being pushed up, it gets to a particular point, it resists, the sellers resist that price, and then what they do, they push the market down again, it gets to a certain point, then it finds support. So the market is finding support at particular points in that market. Now, if you can determine these points clearly, if you can determine the support and the resistance clearly, you're already halfway there when it comes to your trading. All you need to do is find those points, go historically, and find those significant points in the market whereby the market is making those moves, where the market is bouncing, either it's facing resistance or it's finding support. If you can find those places well in the market and draw them neatly and correctly, you are already halfway through your successful trading. The second thing you need to do now is to read price. Reading price will depend on what you call candlesticks. Now, remember, all these movements are candlesticks. Remember, these are candlesticks. Now, those candlesticks should tell you a story. You should determine each level where the candlesticks are for you to be able to tell what story the candlestick is giving you to determine which direction you want to trade. So most of the time, what I tell people is you need to determine initially, when you do your technical analysis, determine which direction of the market you are biased to. So that will be depending on many other factors, right? It can depend on the trend of the market, on different time frames. It depends on your initial analysis, but which side do you want to go to? Now, if you determine that you wanted to go up, you need to find a candlestick somewhere down here. Remember, down here, not up here, because some people, what they do is when they want to go up, they wait for the market to go up, become bullish for them to go up. That's not how it works. If you want to go up, you want to find the lowest point of the market to find your entry. Some people know how to trade, but they don't know how to enter the market. Your entry is as important as the whole analysis. If you have a perfect analysis with poor entry, you're still doing poorly in the market. All you need to do is find that point whereby the market has found support, especially when you want to go bullish. Where it has found support, find a candlestick that is telling you a story that you want to hear. Now, there are different kinds of stories that candlestick can tell you. There are different types of candlesticks that I have talked about and I can still talk about in a different video. But some of the candlesticks that could actually give you a nice story down here are, let's say, if you get what we call a bullish engulfing. So the market was pushing down. You get a bullish engulfing. This is a bullish candlestick, green most of the time, if you use that color. Then that's a red one. That's a red candlestick going down. Then you find something like this here, bullish. What happens? It tells you that the market is ready for a reversal. Now there are many types of candlesticks that can tell you a reversal. Okay, there are the inverted hammers, for example. There are the sometimes tweezer bottoms, for example. It means that the market has gone to the lowest point and it's ready for a reversal. There are things like three white soldiers. There are things like the dragonflies. There are things like the morning stars that can give you that clear sign that, you know what, we are starting to get back up. Now there are different types of candlesticks, so we can discuss that in a different video, but basically what I'm saying is you need to find a candlestick at this point that gives you a clear direction. Now let's go to the trading platform and see. This is my chart today. Let's close that. I want to clear it and make sure that we are looking at a good chart. Good, let's look at this. Let's clear all drawings. Yes, this is IG which I use. Remember, below on the video below, there is if you want to open a demo account, there's FX Pesa, FX Trader, which is a very good platform. I've done a video on it. You can check my videos on FX Trader. An amazing platform. You can start using it right now. Most of you will not be able to access IG based on your location, but if you can, that's fine. But I recommend FX Trader because then you can access them. They're in the country. It's easy to work with them, and the platform is pretty nice. Most people want MT4, MT5, all there. You want web version, you want downloaded version, you can find all that. So click the link below and find a really awesome platform and some good commission as well when you use that link. Anyway, guys, so this is a clear platform. Let me remove the moving averages as well, exponential moving average. So all you need to do is, like I said, this is a clear market, this is a clear platform. You want to ensure that, show drawing toolbar, that you determine certain points in the market that are significant. Now, before I draw anything here, if you look at this chart, you can see that this chart came down, a very nice come down. It gets to a certain point down here, which I'm gonna do a simple circle on. It gets to this point, and what happens? It bounces back up, right? It gets to this point, it bounces back up. It gets to this point, it bounces back up. At this time, we're not looking at the time frame yet. Remember, you can do this at any time frame that you want to do it on. This is the daily time frame, but I trade on the 1 hour, but daily time frame obviously is somewhere I'm constantly looking at before I trade. So you can see that down here, the market gets here and always bounces back. Coming back up here, you find that there is a point here where it came, found a resistance, came somewhere here, found a resistance, and came somewhere here, found a resistance as well. Now remember, don't look at these areas as just a very straight line. Don't expect the market to understand your lines. It's a zone. It's a zone that the market is reacting to. We call them price reaction zones for a reason. It's because they are price reaction zones because it's not just a specific area that the market is reacting to. It's not a specific area. It's a zone that the market is reacting to, right? So these three up here can actually be a single zone that you want to be careful about when you're trading. Now, looking at the places that are marked, you can clearly see that when it reaches certain points in this market, it reacts. When it reaches certain points, it reacts. So what do? You want to make sure you have a line, but remember, even though it's a straight line, it's just a zone. The line is just an indication of a zone. You have a straight line up there that shows you that, oh, when the market gets somewhere around here, it will do what? It will react. You're expecting some kind of reaction at these levels, right? You're expecting some kind of reactions at this level. Now, the other thing I want you to notice that this is on a daily time frame, so I can draw many different lines. But if you are on the 1 hour time frame or even less, you want to draw fewer lines so you're not confused by too many lines. So you want to make them as far in between as possible, but still very significant. So don't pass any significant stages because you're trying to make the lines fewer. What you want to do is make sure that you capture the very significant points of that market. And then I said those are just zones basically. So don't look at them as straight lines. Now, usually if you draw it on the 1 hour, also on the daily, and you go down to, let's say, the 4 hour, for example, you find that it's a difference. So there's a very clear, direction here. And you can even see there's another line up here that we've missed. Now, you can draw your lines of different time frames. What I do is I draw different colors on different time frames, right? So because if you come to the daily here, you might not be able to spot that clear path. And when you go to a lower time frame, what it does, it expands the view, and therefore you feel like you don't have enough lines. If you feel that way, make sure you come back to your trading platform or your trading time frame and draw as well. What I usually do is I draw on the 1 hour with a different color, and I draw on the 1 hour with a different color. So what I do, I can draw here, right, but make this black. So I always remember that I've drawn this with the black one. So my 1 hour would be black. So I can edit that and change the color here to black, right? And apply. So I know that anything I've drawn here is on the black. But the red one is helping me. If I'm trading on the 1 hour, the red one is showing me some significant points on the daily time frame that I should be careful about, because I might end up trading on the 1 hour, forgetting that there are things happening on the daily time frame, on the 4 hour time frame, whatever. So I could be blind trading, right? That's what I call trading in your own cocoon, on your own beliefs. You think that the market is respecting what you just imagine in that time frame. You have to look at what is happening around you, and that one is the daily markings are giving me an indication of what is actually happening around me. So that's what you want to do. You want to make sure that you mark this very clearly. You can still mark another one here as you see, and you will expect certain reaction points at those points. Now, if you go back to the daily, right, let's just say you are even trading on the daily, you find that at every point where I have marked, the first marking down here, if you can follow my cursor, you can see a very clear pattern here. So the market comes down very bearishly, then you find a very small, let me remove that, so a very small, I would say indecision or doji candlestick, then you find a very huge bullish candlestick. This is more like a morning star pattern, right? Or if someone want to look at it, they might look at it as bullish engulfing, but I would look at it more like a morning star pattern. Now, the other note that you have to remember is that these things don't come out perfectly. Don't cram the names, don't cram whatever, don't come how they look. Sometimes you have to extrapolate. You have to use logic. You have to deduce so that you can come to a conclusion of what kind of candlestick pattern are you looking at. And sometimes you need to understand the story the candlesticks tell, not just the names. I always say I teach you how to tell a story with a candlestick. So you won't care about all the names. It's called Marabuzo, bullish engulfing, morning star. You won't know 3 white soldiers, 3 black crows, cloud piercing, dark cloud covers. I know there are so many different types of candlesticks that you can come up with, but what I do is I tell you that you can read any candlestick on the on the chart and know exactly what it's telling you, and that's what I try to teach my students, my clients. So as you can see, it comes and hits down here. We see a very nice morning star, especially if you wanted to go bullish. Comes back up, and then we see at this point again we see a very big bearish engulfing pattern. It goes down for a few days, comes back down there again and gives us this doji one, goes back up again, comes back and gives us another one, another, I would say, bearish engulfing, comes back down. So there was like a chart pattern here as well, like a triple bottom. It hits the bottom 3 times. What did we expect? We expected the upward trend. Now that's called a chart pattern. That's a different conversation altogether. That's a chart pattern. But before you even get to the chart pattern, you can see the candlesticks at different significant points making some massive moves. So like I said, if you can determine good points on the charts, strategic zones where the market or the price is reacting, and then you know the story that the candlesticks can tell you, you get to make your trading 100 times better than it is right now. You need to focus on the basic and the simple stuff, and you'll be fine with your trading. I hope that's helpful, guys. Until next time, I'm out for now. Let me know any questions in the comment section below. Feel free to reach out to me if you need any help. Like I said, there's a link below if you want to open a trading account, you want to open a live, you want to open a demo account. There's a link below. Feel free to open an account and start trading, start making some money in 2024. If you want to go and analyze charts, you can go in and analyze charts, look at the candlesticks that are happening at significant areas. And if you already know where the significant area is, the candlestick is telling you a story. You know how to enter the market always. Until next time, I'm out.